Well, shares fell 2.5% in New York on Friday, and that led to declines of around 2% in Asia today and 1.6% in Australia, to the lowest close in 2 weeks. It's getting harder for markets to ignore the failure of a few southern US states, Florida, Texas and Arizona in particular, to contain the virus, which is pushing the overall number of cases back above the previous peak in the United States. This chart compares the number of cases since the beginning of the crisis with the S&P 500 index, inverted, so up is down and down is up. And you'll see that the recent rise in cases has not been matched by a market response yet. There are also concerns about Victoria in the Australian market, with big falls today by Transurban and Qantas. Oil, iron ore and wheat fell on commodity markets, while base metals and gold went up, and the Australian dollar remained steady at 68.8 US cents. ANZ Bank's economists put out a report on housing stress today with a few telling charts. Household debt is now 195% of disposable income, up from 70% 30 years ago. And that's been accompanied by a more than doubling of the average loan size, both for existing borrowers and first home buyers, and has been caused by the fact that house prices have risen 90% since 2005, while average weekly earnings rose 65%. But because interest rates have fallen, the share of income spent on servicing mortgages has fallen. But note that it's kicked up a bit at the end there because of falling incomes, and that's the concern about mortgage stress. Interest rates definitely aren't going up, but in all recessions, incomes fall. And that's finance. Thanks for watching. You can check out more finance news by clicking there. And don't forget to click subscribe down there to get all the latest updates from ABC News.